This stat is super key for investors to pay attention to.
Months of inventory, and then there's us way up here. We have a massive amount of inventory. Even though new listings were down in July, even though they're going to likely be down in August, there is just a lot that got listed that hasn't sold yet, and that is leaving days on market somewhat higher. It's also leaving a lot more opportunity for buyers.
Now, for any investor that's in a liquidity type position with access to capital, or anybody looking to buy their house, specifically this stat here, I'm not saying there's always a perfect time or not perfect time to buy, but this stat here is something to pay attention to. I think this is really important. Everybody, and welcome to the Canadian Real Estate Channel. My name is Rob Chopra, and I am going to be hosting today's episode with a special guest, Kayla Smith from the Niagara region. A little bit of background on me. I am a real estate investor predominantly focused in the Niagara region on multifamily investments and a mortgage agent with the Finlay mortgage team out of Cambridge, Ontario, where I specialize in helping investors scale from residential to multifamily investments through utilizing commercial financing. I also help investors enter into the market in residential financing as well. In today's episode, we're going to dive into the Niagara market, and we're going to get an update from Kayla, and we're really looking forward to having her on the show today. So Kayla, welcome to the Canadian Real Estate Channel again. I know you've been here a lot. This is my first time hosting this on the channel, and I'm really pumped for today and get to sit down and share this with all the viewers.
Hi, Rob. Hi, everybody. I went on like a slight hiatus, but I'm pumped to be back. Have lots of stuff to share as we enter what is a wonky summer market, and hopefully, bounce back in the spring, in the fall. But we will, let's dive in here.
Yeah, for sure. That hiatus, I'm sure, gave you an opportunity to get a lot of stuff done on the back end and maybe spend some time with your family over the summer, which is awesome. For some of the viewers maybe as well that, haven't seen the episodes in the last couple of months, why don't you give a little bit of background on kind of who you are, Kayla, what type of stuff you do in the Niagara region specifically?
All right. So I am a realtor and a team lead. So I run a small investment focused team, kind of Niagara to Toronto now. We've expanded. We just closed on our new office, which will be in St. Catharines. We will be inviting everyone out there to see it once we have furniture. And I'm also an investor, so I do a bunch of different stuff. My favorite lately, as everyone knows, being the Airbnb space, but and we also help investors kind of get in, scale, and we have different members of the team that help with that depending on what part of the journey people are in.
Amazing. That's awesome. I personally had the opportunity to work with Kayla and her team, and the experience has been phenomenal. And I think for investors, like, this is my backyard actually in Niagara. This is where I like to invest. Let's dive into today. Let's see what you got for us. I know you have a nice slideshow prepared for us, so looking forward to jumping into this one.
All right. So these are the July stats. I realize we're doing this in August, but obviously August isn't over yet. So we work with July stats for now. So this is taken from the Niagara Association of Realtors. They put out their own stats every month. So interestingly enough, there was a total of 522 units in July of 2023 compared to 369 in July of 2022. And then we listed 1,280 res properties compared to the 1,174 in July 2022. The interesting thing here, I think, is the average days on market in July 2023 was 32 compared to 31 in 2022. So the one thing I do want to touch on is everyone remembers when things were crazy. This time last year is when things started to slow down. Rob, you probably remember that quite well as well. So this is just, these numbers aren't as, there's not such a huge contrast here because there were some similar activities in the market, and the rates had already started to kind of creep up there. And the price gap, before we were saying, oh, you know, it was 30% difference. Well, now we're only at a 6.6% decrease in price in July 2023 compared to 2022. And we also saw a very slight increase to the composite bench price. It's just an average house with an interest rate increase that month. So kind of interesting there. More sales and more listings in July 2023 than July 2022. I would like to say that people are more acclimated with the climate, but whether or not that's true, we shall see in the coming months. But this is also an interesting time because people do go on summer vacation. It's the first full month of summer. And according to NAR, the Niagara real estate market is in good shape and holding steady.
That's a really, really good thing. I love to see that.
Yeah.
It's interesting to see here that the days on market between the 2 years, considering, right? Like last year, we're seeing some really escalated prices through a market to where today they're a little bit lower, but the average days on market are still somewhat similar. It's an interesting stat. I would not thought that to be the case.
Yeah, I wasn't like, I follow this. We did this time last year. It is interesting to see that. It does seem like a long time on market, especially when we were used to saying like, hey, the average days on market is 6 or 8 or whatever it was when everything was crazy. But this is definitely better for buyers, and in my opinion, in some cases better for sellers, because especially if they're buying. So with that said, so this is year over year. So again, we just kind of went through this, but number of sales up 41.5% from 2022 to 2023. That benchmark price, as you can see, went down that 6.6%. Average days on market, hardly a change there. And new listings were up 9%. So again, kind of indicative that there's a lot of things happening in the market here. But I will get to why buyers do have quite an advantage right now.
I love that conversation.
Yeah, we'll get there. July stats month over month. So number of sales down from June to July. Seasonality of real estate, this is very normal. People do go away in the summer, especially because the last several summers we've had some stuff going on. This is probably the first full one where people aren't as worried about that or worried at all. Here is your very slight increase in benchmark price. 667,100 to 667,600. Days on market up 2 from June to July, and then new listings are actually down, which again follows the seasonality. Not everyone is excited to list their house. Well, 1, they're away. 2, their kids are home. 3, there's a lot of stuff going on in the market. In people's lives, traveling. So a little less going on in the market.
Yeah, the seasonality thing is interesting because it's not just the summer, right? Like we face that in the wintertime as well. You know, I've often been told, hey, this is the time to take vacation. I just find it very difficult to do so. Yeah.
Speaking of seasonality, so you can kind of see it here. These are your 2 best indicators. That's like pre-COVID, during, and then kind of as we came out of it. So we are basically here. We should still see this come the fall, depending on what happens with the interest rates in September. We could still see it if they go up because people are in a bit of a tough situation. We may also see it if they don't move or go down, which is unlikely, but because people will see an opportunity. So that's kind of, you can see it's more following this trajectory now as opposed to whatever the heck this was. And
it's at the same time of, you know, year over year, like this graph is almost like identical the whole way we go through.
Yeah, there's a few little outliers. Again, no one was doing anything here. But it is interesting. It was like a little blip in time that felt like so long. But as we spread it out, this is 5 years. We could have went as far as 10. And this would still be what I expect we should see come this year. Median sales price. So again, obviously we are way down from here, that crazy time, January, February of 2022, but we are still way up from here. So of course it depends on how long you've been in real estate. If you bought here, this is not exactly what you're wanting to see, especially because it went down in July, but keep in mind that also has a lot to do with what people were buying. It's not just solely based off of the entire picture. Median, because we don't have any of the major outliers in here, like the $5 million houses in Niagara-on-the-Lake as an example. But if you bought down here, you're still in good shape. And if you bought here, you're likely doing, you know, reasonably. So that I wanted to show, but to what your point was about your favorite conversation, why do buyers in Niagara have a pretty powerful, you know, leg to stand on right now? So months of inventory, just basically how long it would take to buy every house on the market at the current absorption rate. So people are buying houses at a certain rate. This is how long it would take if no more were listed to buy all of them. I did a few different stats here just for comparison. Hamilton being probably our next closest market. So they have 3.1 months of inventory. All of Itso is the board that we all operate in.
Okay, that was going to be my question.
Yeah. So basically outside of Toronto and everyone else shares data. So that's the average kind of across the board. And then there's us way up here. So we have a massive amount of inventory, even though new listings were down in July, even though they're going to likely be down in August. There is just a lot that got listed that hasn't sold yet, and that is leaving days on market somewhat higher. It's also leaving a lot more opportunity for buyers to get the conditions that they want, to negotiate down, to get creative in negotiating, like rebates as opposed to, you know, price reductions, inspections, all of this stuff. So it's giving people a lot of opportunity. I'm thinking it's a, you know, that's a good thing from where we were, because you can see down here, months of inventory was almost nothing. But this is even higher than what we're used to pre-COVID. So
yeah, this stat is super key for investors to pay attention to, because having that much inventory on the market, that many months of inventory, allows them to be a little bit more particular with the type of asset as well. Yeah. So like you've got first-time home buyers or like residential home buyers looking for, let's say, their favorite place or their ideal house, versus investors that want a little bit more of an opportunity in terms of location or type of property itself specifically. Like this is very interesting. And you know, it's been a long time since we've seen something like this, especially in the Niagara region, right? Like where I can speak to predominantly. It's been a long time, which now for any investor that's in a liquidity type position with access to capital, or anybody looking to buy their house specifically, this stat here, I'm not saying there's always a perfect time or not perfect time to buy, but this stat here is something to pay attention to. I think this is really important.
I agree. And it's also, it just indicates that you get time to make your decision, which I found wasn't necessarily a thing, again, down here. But you have time. You don't necessarily have to see a house or see an investment property and put in an offer immediately. You have time to go home and run your numbers and talk to your mortgage broker and talk to your realtor and all the other maybe of partners involved. You have time, which is very valuable when you're making investment decisions. So very important stat. Lots of opportunity definitely for buyers in Niagara. Okay, deals. So deals, love them. This is a legal 3-unit property in Welland. So you have just shy of 1,700 square feet above grade, so it's not small. It was all fully renovated. It's beautiful inside. The units are really nice. You have 2 beds. You have a 1 bed. You have gross rents of $45.50. Tenants pay their own hydro. There is a cap on gas and water, listed at $799. But the reason why this one I find to be very interesting is the additional dwelling unit potential in this very large 2-car garage in the back. So you will have to do buyer due diligence here. Minor variance is necessary to do so, but that is an opportunity to add a 4th unit, to add more income, and there is some upside on these rents as well. So it seems to be a decent opportunity for someone who's looking to enter the market without getting into something that's too big, but also still have that opportunity to do a value add and acquire some, a good property with some good tenants.
I think the other important thing about this too is it's being able to acquire a turnkey asset, especially let's say for a newer investor trying to enter the market without having to go through that full renovation, which would mean a tremendous amount of capital up front. So even if, assuming that the minor variance would get accepted on this by the city, you've got the renovation capital that would be required for the ADU and the garage, but you're already cash flowing from day one on the house itself from the 3 self-contained units that are already done. Kayla, I have a question about this one. How is the unit breakdown on the house specifically? Like, where are the 3 units in this house?
So there is a 1-bed on the main floor. There's a 2-bed in the basement with actually 1.5 baths. They all have separate laundry. I should mention that as well. And then there is a split level unit that's a 2-bed.
That's neat.
Actually on the main and then the upstairs. So it was very well done. The renovations are quite nice. And like you said, there's potential here. The other thing too is before we used to talk about like, the BRRRR opportunity and the BRRRR strategy. Liquidity is not everyone's best friend right now. So to be able to jump into something turnkey is far more desirable in my opinion than it used to be. Especially when we don't have, the market helped a lot of people with those BRRRRs, as we know. We don't necessarily know that that's going to be a thing. So if you can, force appreciation through another unit, but also that doesn't necessarily need to be done right away. That can be a longer term play. This can be a longer term play as an investment strategy. So I think that that's also something to consider for people. You can set it and forget it if you want to for a while and then work on the back when you're ready, or you can jump right into it with the renovation budget that you would have allocated to the house itself.
There's a couple of interesting strategies that you could utilize this on from a financing perspective as well, right? That additional ADU in the back there, this is something we're seeing more commonly happen in the Niagara region, especially I have clients that are doing this where they're taking a garage and they're converting it to a 3rd unit. We're flipping it from residential financing into commercial type financing. The beauty of that is specifically is it allows you to control the income and the valuation of the property based on the debt coverage ratio. And that debt coverage ratio meaning the NOI, right? So the net operating income that you're generating off this property. Now, Kayla brings up a really good point about being able to set it and forget it type thing. You can go through this process with the city of the minor variance, assuming the numbers on the acquisition would work well for you regardless. Let's just say worst case scenario, that even as long as the numbers work on the 3 units that you have in themselves, you go through that longer term process over time, right? This is becoming more and more and more common in different markets like Niagara specifically. You've seen a lot of these types of opportunities. So the financing, available on these is very intricate and very unique in itself. So this is a good one. I like this.
Yeah. And it's our listing. So we will put the link to the listing in the description below. And I also just wanted to point out to your point about people doing this a lot. Like we have a property right now where we have permits ready to go, but it's cash flowing as it sits. We don't necessarily want to do the reno right now on the additional unit. So we're just letting it ride until we decide to do it. And then we'll refinance at that time. So there are, between the two of us, we talk to investors all the time. There's a lot of people that are looking for, that opportunity as well. So I definitely see this as an option.
I have a question about that garage.
Yes, ask away.
What type, like when you look at the size of the garage, can you get 2 bedrooms in there?
I believe so. Obviously, it would be dependent on architects and drawings and all that stuff. But I have seen similar size garages in Welland be turned into 2 bedrooms.
And what can you, so if you had to look at a range of the rent that might be available in that garage, assuming one
Yeah.
bedroom or two bedroom, let's just use a range, because I
Yeah.
think this will help with people trying to do their numbers on their own by watching this. What type of range of rents could be utilized, do you figure?
Honestly, anywhere from like 14 to 19, depending on what it looked like, depending on
Okay.
how big it is, depending on, you know, how it ends up, like how it turns out. There's quite a range, but if someone wants to zero in on them, there's a few that are currently being rented. You and I are both aware of them, that we could definitely get those more precise numbers based off the size and what could be done with it.
Okay, cool. Good benchmark to start with anyway.
Oh, absolutely. All right. I have spoken about this one before. I'm going to speak about it again because I do think that it is still an opportunity. So there is 5000 Bridge Street, Niagara Falls. It is has 4 units in it, 2 2-beds, 2 1-beds. There's permits in the for the basement to do a storage unit as well. The big thing here is the zoning. It is zone GC, which allows for short-term rental. As someone who has and manages Airbnbs, I can say that Niagara Falls, for obvious reasons, does very well. And it doesn't seem to matter, you know, the distance from the falls or those types of things. So you can kind of see all of the action is back here, and it's right on this corner here. And it's, I mean, maybe a 7-minute drive from everything. So it has had a full exterior makeover. Some of the units have been renovated. There are two long-standing tenants in there. So that's obviously to be taken into account when you're running your numbers on this. But the other thing that I do really like about this is a similar size lot on the same street currently is being developed into stacked townhouses. So there is a few different strategies here. And this comes to like the set it and forget it again. If you want to hold it long-term for the land value and still make money while you're doing so, this is a good opportunity to do that. You can actually see there's a vacant lot right here. So that one is also being developed. So there is a few different opportunities here. They are, so that it's listed for $799. If anyone's interested, obviously reach out to me. I'm a big fan of the Airbnb investment strategy, especially right now. I know lots of people are because of interest rates mostly. But also, it offers kind of a bit of more flexibility as well.
Niagara Falls will always be there. The fact that you can have a certain location that you can Airbnb legally with the amount of hotels that are in the area, this is huge. I'd be interested to see some further stats at some point in time in regards to the occupancy when it comes to Airbnbs in Niagara region. But here's the way I look at it. I have family that comes from out of town, and Niagara Falls is obviously a go-to destination for them. And it's a lot cheaper or a lot easier even to have your own space versus being in a hotel and having to, you know, fend for yourselves when it comes to food and stuff like this. It's pretty cool to see the city allowed something like this in that location. And when you're talking about land banking as an example, I mean, Niagara Falls is a good location to do that.
Yeah. So that's one of the toughest things about Niagara Falls is the zoning that allows for it, for short-term rentals. Obviously there's 3 zones. They got rid of a bunch of it. They turned a bunch of it into kind of a mixed zoning. You kind of want to work in, everyone can take the risk that they want, of course, but if you're going to do it and you are kind of concerned about that, Niagara Falls has already set what they want. They said it can be done here. Those are easier restrictions to operate in than the gray that a lot of cities offer, because I mean, similar to Hamilton as an example, they haven't put anything into place yet in terms of they're like policing it, but we had something come down that you can't do it unless it's owner occupied and a bunch of other rules. So to be able to do so in an area that is already zoned to allow you to do it, there is a benefit to that.
I like it.
Yeah. And then moving on. All right. So this is in Welland. It is a commercial building. So Rob, this is kind of your bread and butter as well as the other ones. Yes. So you have 5,600 square feet. We are actually doing a price drop today. So you're seeing it pre-price drop. We will be going down to 649. You heard it here first.
Wow.
So you have 5,600 square feet. You have commercial on the main. You have 2 very large apartments upstairs. And then you obviously have kind of your entrance to upstairs here, your commercial here. I'm not going to shy away from this one being an extensive amount of work, because it is. But there is a lot of opportunity. There has been confirmation that 6 res units and 2 commercial units is an option. Again, buyer to do own due diligence on that, speak to your architect, all that good stuff. But there is potential there to make this a lot more than what it currently is. The other thing I do want to point out is this building to the right, which you can't really see it, but you can tell it's been painted. This just sold. So that was turned into beautiful office space, just 2 floors of office space. It just sold. There's no res units in there, but it sold in the 900,000. So
wow.
Yeah. So there is kind of, there's a reference point next door. And again, it was just office space. So if you're working up from there, and maybe I'll let you speak to financing a bit on this one.
Yeah. This is very cool because there's a couple of different options you can take on with this one. To hear that the potential, and obviously, again, I'll reiterate the buyer's due diligence aspect of things, but with the potential to go to 6 residential units here with 2 commercial spaces still in. Before I go into that, Kayla, is there any opportunity to convert the whole thing to res, or is it a city requirement that there still has to be some sort of commercial component? Because I know downtown, while it could be, have different rules in kind of little areas of the city.
So they're going to want to see some commercial facing because of the type of building it is. However, with that, I will say that downtown Welland offers fantastic grants for the exterior of your building, for different pieces of your building, for the facade. Like, there's a lot that they're trying to do downtown. And again, downtown Welland could use the facelift, and it's slowly starting to happen, with the building next door being a fantastic example of that. So while, yes, it would be great to have all res units, I do think that there's an opportunity here to bring in, maybe a cool coffee shop or something like that, and still get those grants to make it happen.
Yeah, for sure. The grant, I'll second that. The grants that are available are phenomenal. I mean, we have clients, mutual clients as well, that are doing some stuff down there in terms of utilizing commercial space, which is a requirement of the city. So let's talk about this one for a second from a financing perspective. What I always love to hear is the more residential units that can be added to something. Even with the commercial space, we can still look at CMHC financing on this property specifically, okay? So just to clarify, without going too far on this, but the CMHC financing that would be available on this, assuming, would be that the commercial space specifically does not exceed 30% of the gross floor area, nor 30% of the CMHC loan amount specifically. So I'm happy to have this conversation with anybody about this. This fires me right up because I love this stuff. But, CMHC as a whole, like, the program has obviously its requirements as part of the financing that's available. But even if CMHC financing isn't available on this, there's still a commercial component that's available on this, okay? And it's important to understand for any of the res investors that might be moving up into, multifamily or commercial space, or even newer investors that might be looking at doing something like this, essentially, is that there are still opportunities in financing that don't have to utilize your debt servicing ratio specifically. More so, it's the strength of the borrower with the performance of the property. I like that we're in control on this building with the amount of upside in terms of the income specifically. If you look at the commercial component of it, we could be looking at the option for triple net leases as well, which would allow for your debt servicing to come down, meaning your expenses to come down, which obviously increases your overall NOI. I think this is a great opportunity to hear something. I didn't know about that next door, the sale at 900K-ish. But, yes, it will require, as Kayla mentioned, I think you can look through the front window there, the amount of extensive work that would be required on this. But I think the grants, the combination of the grants from the city, and then also if the CMHC, the clear exit is to CMHC, we can also look at getting you a portion of the renovation capital based on the as complete appraisal of the building. So really wanted to share that one as well. This is a cool one.
Yeah, I'm very glad that you're here to do all of the explanation on it. Anyone that wants to dig further into this, definitely contact me, contact Rob, because we will be able to help. But the other thing I do want to stress is that it is fully vacant. So you don't have to worry about doing any of that part of it yourself. So I did want to bring this to everyone's attention, and some potential there to possibly pick up more than just this one. So definitely contact us. Again, we will put the link in the description for you guys to check it out yourself. And you will see the price drop on that one.
Yeah, and like Kayla and I are here to help. You know, if there's somebody that's looking at this property that wants to buy, like, just know that we'll be in the back end helping you navigate through this as well, right? I mean, Kayla, we have mutual clients together that we do this for, so I'm happy to do so. Interesting to hear 649. You've got my attention.
I'm glad. That's why we're here.
Yeah.
All right. This I just wanted to pull to show everyone that maybe doesn't have a super expansive budget. These are all freehold houses that are under 400,000 in Niagara right now. There are 33 of them with varying days on market. Some have the potential to add another unit. Some have flip potential. Some are in up and coming areas. It's kind of across the board. But I just wanted to pull this up there because I know that a lot of people, or some people, are feeling defeated right now because of interest rates and prices. These still exist. And I mean, the entry point, as long if you're in, especially at these low prices, there is definitely some opportunity there. So I just wanted to show everyone that these exist. They're out there. There's 33 of them today. There could be more tomorrow. But these are everything under 400,000. And you can see it's not just in your further out cities, like it's everywhere. So
I haven't seen these numbers in years.
I know. That's why I wanted to just bring it up. Like 289 in St. Catharines, don't get me wrong, this house needs a lot of work, but it's in a decent area. It's a cute little house. It needs a lot of interior work. The exterior actually looks pretty good. Again, buyer due diligence. But yeah, I just wanted to show everybody that these are out there. These are for the people that are in the market.
A couple of ones that really stand out to me here are the ones that are north of 1,000 square feet. Now, assuming that they have the capability without having to do a tremendous amount of work to create, you know, an additional unit or multifamily from it. These square footages at 1,000, 1,100. Some of these have been on market for quite some time,
yes,
which would obviously allow some movement in regards to price and probably inclusive of terms, to see if you can even get it across the finish line when it comes to conversions. Again, you know, helping the issue of housing supply and everything too. These are cool numbers.
Yeah. So just wanted to touch on that while we were looking at some deals. And then, as always, I do like to touch on development news to kind of round things out. So as everyone knows, there is a $3.6 billion hospital going in Niagara Falls. As a result of that, the Niagara businesses are already starting to feel an increase in their, let's call it revenue, let's call it customers, let's call it what it is. There are a ton of people working at the site right now, which is benefiting a bunch of different things around it, restaurants, housing, all that stuff. They are trying to work with trades in Niagara first. Obviously, if they have to go outside of Niagara at that point, that means people will be coming in and needing places to stay. But this is a massive, massive, massive investment in the Niagara region and Niagara Falls. So I talked about before, Niagara Falls is getting a university there first. They're set to see their first influx of students very shortly. Now we have this massive hospital that, you know, they've actually started to build now. And if you're unfamiliar with this, there are also some very, very high-tech, front of the line, like very, very prestigious businesses going in around it. Some training facilities for very, very high-level athletes. We also have the Canada Games. If you're not familiar, they built a bunch of stuff for Canada Games. So just very cool stuff happening. This is going to bring in a lot of also very high-paying jobs, obviously, hospital, which will bring in people from all over the place. So that is exciting.
Kayla, where exactly is this?
Oh, I guess if you're not familiar, it's like the south side of Niagara Falls, sorry. Right now it's like if you drove through it, you'd be like, okay, this is being developed, but it's kind of rural-ish.
Yeah.
But it's so close that it's going to be immediately built up as soon as that hospital is built, as more so than it already is. So there's a lot of new builds in this area as well, which obviously if they knew that this was happening, that's great. If they didn't, that's also great for them.
Yeah, one thing I think about this too is for anybody that when you're looking at strategies in terms of short-term rentals or even midterm rentals, this type of business, like a hospital, schools, things like that are coming into the community, this is hugely lucrative for investors to be able to still have those strategies within the properties that they own and signing those lease agreements directly with the hospital specifically. Like, it's just going to be 100% occupancy over and over. Let's say they have a doctor that needs to stay in town for 3 months or whatever the case is. This is awesome for the city. I just have this special place in my heart for Niagara.
Yeah, I agree with you. The other thing that I will be interested to see that I just suspect will happen is a lot of nurses coming over from Buffalo, because we see it. We deal with a lot of leases, and we do actually get quite a few people from over the border who are working here. But they don't always stay for a year. They will come and work 3 shifts a week or whatever it is, and they stay in Airbnbs. So also interesting because they get housing credits and all that stuff. But, so a few different things that this plays into, but I just wanted to point out that it is already having the ripple effect. We're going to see a bunch of new businesses pop up surrounding the hospital. You get all your fast food stuff. If you look at the best example, the hospital in St. Catharines that was built now several years ago, but it's still quite nice. That whole area is built up now because of that. There's condos, there's restaurants, there's doctor's offices, there's a whole bunch of stuff. So I suspect we will see the same thing here. Yeah,
for context, that's the 4th Avenue area, right?
Yeah. And then last but not least, I wanted to point this out because I don't think I touch on the smaller cities enough. This is in Fort Erie. So they are building a new manufacturing facility. You can kind of see it back there. Siltech, they deal with different materials for a bunch of different businesses, but these types of jobs generally tend to be pretty reasonably well paying, especially in Fort Erie where things tend to be a bit cheaper. This is going to be a new facility, so you're going to find a lot of people needing to rent. So for the people that do invest in these smaller cities, this is going to bring some very good rental potential there. And to go back to those deals under 400,000, well, there's quite a few in Fort Erie. They may be single family, but they are, 300,000. So is there an argument there? Obviously you have to run your numbers, but there is a possibility that this may be a reason to consider those types of investments, or if they can have a unit added later or something like that. So obviously they just did shovels to the ground very recently, 28 days ago. But it is still very much so worth noting because this isn't the first article that I've brought up for Port Colborne and Fort Erie and Thorold South with very, very similar businesses coming here. It is cheaper. It is closer to the border. We also have a ton of space. So something to keep in mind when you're debating on investing in Niagara.
Yeah, one of the most important things for any investor is what is exactly the industry that's happening and what's driving people to the area. Like we look at tertiary markets and we say, people are moving there for what reason? This is an incredible opportunity because by the time it's done, you've already have people that are coming into that, which essentially will, lead to raised property values, et cetera. So a time of opportunity as you're looking to say, like, trying to figure out, hey, where is that next best place? There's never a perfect answer, but things like this will really point that out for opportunity.
I agree. In my previous life, when I worked for the government, this is what I used to do. I used to work in the job trades, all that stuff. But one of my main things that I did was kind of looking at what's happening where and why. And Niagara is huge for manufacturing, and these facilities do need a lot of space. So there is a very good chance that we will just continue to see this along with all this other stuff that's happening here. So I think it indicates we're going in the right direction for higher paying jobs, which I know some people, that's like the first question we get is, where do people work in Niagara? Well, they work in places like this. They work at new hospitals. They work at Brock University. They work for MTL. There's a bunch of different stuff going on. So wanted to share that as well. And that's it.
And that's aside just from even hospitality, right? I mean, there's so many hospitality jobs.
That's the one everyone knows. They're like, oh, the wineries. Yeah. Which I get.
That's what they think about. So what is like with your clients currently right now, what are you seeing the most opportunity in? And where might that be? Like, you know, Niagara is a pretty big geographical area,
Yeah.
right? When you talk about Port Colborne, Welland, Thorold, Niagara Falls, Fort Erie, stuff like that, where are you seeing the most opportunity right now?
Here's what I'll say. If you're doing long-term investments, we do a ton of leases for our investor clients, and we haven't had anywhere where we haven't been able to place an A-plus tenant. They do exist everywhere. Does it take longer in some areas than others? Yes, of course, but it is well worth the wait. Our clients are either looking to get into an Airbnb market, looking for turnkey long-term investments, or looking to scale up into the commercial space where, you know, their own personal income and investment properties aren't the only indicator on whether or not they'll be approved for it. So that's what we're seeing. And we're seeing kind of opportunities in all of those. So that makes sense. But for our clients, it seems to be that. And with the people that are restricted on budget, we are seeing they're more open to moving to smaller cities. But again, for reasons like this, where you are going to get a good tenant as well. So that's kind of ours. And then we have people that are still flipping, but they're flipping at lower prices. So they're flipping in the 400 range because, you know, there's a lot less risk than flipping $1 million house.
I think this is the entry level type market, right? Where the entry level is, you know, the price is dictated by what people are willing to pay, but what they can also afford to get into the market versus getting into a luxury type area where they're sitting longer, they're paying more for the property, the margins are a lot tighter, you know, which is essentially like that entry level market. Even with, you shared the stats or the chart there with what the price of homes in the days on market that they are. If you take a look at it, you can pretty much figure out like what that baseline looks like to what that entry level is. And this is the type of space with a lot of opportunity in the Niagara market that you can get into this and force appreciate the value on the property specifically to execute more strategies. And one other thing I wanted to touch on too was about the turnkey aspect.
Yeah.
Are you seeing a lot of turnkey opportunity on the market in Niagara? And why I bring this up specifically, Kayla, is because the whole thought process for investors are like, hey, I'm going to buy this for $500,000, then I'm going to sink $150,000 into it in renovations. You know, now you're in for your down payment plus your renovation plus your carrying costs, and they get kind of thrown off a little bit with the amount of capital that's required to get into it versus, let's say, the triplex that you shared there on commercial. You know, buying it at, let's say, $700,000 or $800,000. I'm sorry, I don't quite remember the purchase price. My point there is though, is that now it's just literally turnkey at that price and you can save up the capital. So are you seeing any opportunities like that?
Yeah, I would say there's definitely opportunity to get into a turnkey product. I also think that if people are still working on forcing the appreciation, that can totally be done still. We've seen it be done. Appraisals have come back, but just keep in mind that appraisals are not necessarily where they were at one point, obviously, but not even necessarily what people are expecting them to come in at. I don't know if you're seeing the same thing, but we've seen it a few times.
Totally.
Yeah, so I think there's a lot more, I don't know if hesitation is the right word, but yes, there are turnkey products. I also think people are more excited about them. I'm also seeing people willing to do, you know, some work. Maybe a kitchen needs to be done. Maybe that's the only thing, but they're not looking to get into a large scale conversion as an example where, you know, if you would have asked me this question 2 years ago, I would have said that's what everyone's doing because that's what the market depicted people should be doing and it was working. So yes, I do think there's a lot of turnkey opportunity or, you know, maybe $50,000 worth of work max. But you don't have to spend $150,000, $200,000 to get it where it needs to be.
Yeah, I think multiple strategies being able to be utilized on the acquisition, right? If you have more of a turnkey, even upper, and I'm seeing clients doing that as well, where they can essentially work something out with the tenants moving in, get some income coming in from day one and work on the basement or work on, let's say, the detached garage, which isn't a tremendous amount of interference to the tenant specifically, but like these opportunities, it's about pivoting with the market too, right? Like, you know, a couple of years ago, it's like, yeah, we want to buy that value add opportunity and sink all this capital into it and then go back and refinance because the values we're speaking to are. Whereas now, like you said, the appraisals, I've seen appraisals come in with a huge range for a triplex that's separated by 3 or 4 streets.
Yes. Yes. So
And it's going to be appraiser dependent.
Definitely something to consider. So yeah, I think obviously everyone's investment strategy is different, but regardless of what it is, I think there's an opportunity out there. There's just certain ways to pivot to make sure that you don't handcuff yourself to a property by sinking, X, Y, Z into it and not being able to pull it out.
Yeah, I love that. I have another question about your team.
Yeah.
So specifically about the team, you've been growing your team over time, right?
Yes.
And so when it comes to homeowners, investors alike, you're able to accommodate, let's say, first-time investors versus investors trying to get into the multifamily space, and you have specific team members that can help with that. Is that correct?
Yes. So we allocate people to specific team members based off of what they're looking to do and based off of team members' experience, and obviously what they're interested in on both parties. And then even on just the non-investor side, we also have people that, work in that, prefer to work in that. So we're kind of covered across the board, just depending on what people like to invest in. And we kind of work with them to figure that out if they're not entirely sure when they arrive to us. And then we bring on whichever agent makes the most sense based off of that.
And can you help from like a trades perspective and stuff as well, or even property management? Can you help investors get into the area, from outside?
Yes. So we are pretty well connected from doing, our own stuff and a lot of it recently, and obviously historically, but also just from networking in the area. I've been in Niagara for some time. So that, and then we also do property management for our clients as well. So if that's what you're looking for,
it is now public knowledge. that's
a one-stop shop, if you will. So
yeah, that's great. That's awesome to hear. Well, I appreciate the update today. Before we, maybe wrap up, do you want to share anything else, Kayla, or?
Just that all of our information will be below. If anyone has any questions regarding anything we talked about, Niagara real estate, all the way to Toronto, like I said, we're from here to there. It'll all be below. Follow me on Instagram, DM me. Happy to chat.
Okay, awesome. What's the best way for people to get a hold of you? Is it through Instagram or Facebook or anything like that?
Yeah, we have our link tree there too. So if you're looking to book a call, you can do so there. But otherwise, I'm pretty active on both in messaging. Going to be more active in posting. But you will see lots of cat pictures, so there's that. But you can just DM me on Instagram too. I'll get back to you pretty quick.
Awesome. Well, I really appreciate that. This was a lot of fun today. For those of you that don't know, this is my first time hosting on the Canadian Real Estate Channel. Super excited to be here. Kayla is not only a fellow investor, she's also a friend. She's also a partner in multiple different ways of real estate and business, which I'm really grateful for this opportunity. So if anybody's looking to get a hold of me, you want to chat financing on any of the deals that Kayla has that she presented today, or in general, if I can be of any value to you as an investor, you can reach me on Instagram as well at rob.chopra. I am, again, with the Finlay Mortgage team out of Cambridge, Ontario, and I'm here to help you. So Kayla, thank you very much for today. This was a lot of fun. I look forward to doing this again down the road. But thanks for sharing all of your knowledge with all of the viewers.
Thanks, Rob.
All right. Have an awesome day, everybody.